Good morning, Mike Brady with Generosity Wealth Management, and today I want to talk about active management and what's the role of that, what's the place in someone's portfolio, and frankly, can timing, here we go, can timing be done and done successfully? Let me just tell you that in kind of a previous life, a different company that I was involved in the late 90s and the early 2000s, we were known as the market timing firm, and we were extremely successful at that. And so I know firsthand that market timing with the right players and in the right environment can be very successful. However, most people cannot market time on their own, and market timing traditionally is meant to be when to go in and out of the market, whether it's a short term, meaning a day or two or a week, or even longer term, month, quarter, year, going between stocks and bonds and cash, etc., whether that's with mutual funds, etc. That's kind of a traditional discussion of market timing. I think that those that can successfully market time are very small, but I do believe that it can be done. It's just very, very difficult, and it is extremely difficult for an individual investor to do it on their own portfolio. I use an example of whenever I need some legal work done, if I try to do it myself, I'm not going to be successful. Does that mean that legal work, is not successful? No, I have to go to a lawyer, someone who is trained and is unemotional about the particular problem or issue that I might have. But as Mark Twain said, that particular lawyer, a lawyer who represents himself as a fool for a client. Well, what he's really saying is a lawyer should not also represent himself. So it's very difficult when you're emotional about an issue to handle it on your own. That's why I think a professional advisor makes sense, even if that person is doing some market timing. I do allocations within sectors. I'm usually almost always invested, but I'm trying to weight, kind of tilt one sector over another, whether it's large cap, small cap, mid cap. But what I don't do is go 100% stock one day and 100% cash the next day, or even week by week. I think that is a skill that is extremely hard to do, and a lot of times just isn't very, very successful. I'm not sure that the environment today is the same environment that it was 10 and 20 years ago. Unfortunately, the statistics out there show that investors who try to time the market on their own are 20% less successful than if they had just done a buy and hold. And once investors become active, the study that I just read a week or two ago says that 40% admit that they're probably too active and that they've hurt themselves. So I'm kind of giving a waffly answer here. I do believe that it's possible. It's extremely difficult. I believe that a better solution is probably to be well diversified and to tilt particular sectors one way or the other and be very well diversified. I do work with some good managers that I'm very pleased with their particular approach, and I'd be happy to talk with you about them and the way that they manage money, not in a market timing situation, but in a good active management situation where it's deciding what are the tilts and the weights of that particular diversification. So hopefully this video made sense and clarified things a little bit. Either way, give me a call if you'd like to talk about it. I just absolutely love hearing from you and from your friends, and pass it on to someone if you think that they could have some value from this video. 303-747-6455. My name is Mike Brady here in Boulder, Colorado. You have a wonderful, wonderful week. Thanks. Bye-bye.